Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Sunday, February 26th, 2023. The markets are opening in Globex and basically are kind of standing pretty still. We're seeing a little bit of movement now as we move on within Globex. With the NASDAQ's up 15, the S&P is only up $1.25. So not much really to be adding. So let's just go over what we saw on Friday, what ended up happening in terms of our count. So again, I'm on my hourly chart, and I continue to look at that it is the minute fifth wave still in progress, as I was talking about at last update, and the fact that we had the 4, and originally I put the 5, but then we zipped up and now we're coming all the way back down. So I had left open that potential for that we could see this extended fifth, and that's pretty much exactly what's happening. So again, we have within this fifth wave, we have 1 of 5, 2 of 5, 3 of 5, 4 of 5, and we still likely have one more little zip down to put in, at least basis the hourly chart, and that would be anything below 11,906. Let me just be exact, 11,923, which was Friday's low. Make sure that that didn't go lower. It did not. So we're looking for a move down below 11,923. Let me add a quick fib. If this indeed is 1, 2, and this is the third, I can put in a quick fib, which will give us some indications. Again, depending on where this is right now, I'm going to place it right there on the 20. Give it a little bit more extra room that it could get to up there. And it might start to overlap, because don't forget, we got this one at 12,026. So we're getting above 12,000 now. We don't necessarily want to see it above there, but I'm going to give it all the way up to 44 again. The only other, and I'll show you the alternate count in just a moment. But indeed, if we're going to turn lower, we can be looking for a possible move down to just below 11,900, and then we have 11,880, and then we have 11,865, I'm going to call it. 52 down to 42, we'll call it that. And then that likely should put in the basis of this fifth wave, minute fifth wave, set the stage for another small rally. And that will be, again, that's because what we're looking for is the completion of that minor wave 1, and then we get a minor wave 2. Outside, what also could be happening is, again, we have 1, 2, we get the 3, we had a 4, and then a 5 coming down here, possibly. And somehow that then completed it, because we continue to roll around that 935 down to 23 level, and it could have been right here. Could have been a 5, and then right here, and we could put that minor wave 1. Now, if that's the case, then what we got to turn around and do is remove this one for the overall fifth wave, because we did get down to that 50% level, and so that should be strong support again, right? 11,930. We got down to 23. The next level would be 11,852, 853. That could be the 5. Then we get the 1, and now we're going to be moving into a minor wave 2 corrective process. So again, taking it back out to the 4-hour chart, opening this up so that we can see it. Actually, I can just go to the hourly chart. Sorry about that. And then don't open it up quite as wide, right? So we have 1, 2, 3, 4. We're trying to look for the 5. If the 5 was there, then we're going to get a minor wave 2. And if that's being the case, I'm going to remove those fibs. I'm going to come out here, and we're just going to put in retracements. So what we're looking for is the retracements for minor wave 1. Let's try that again. You hit the wrong side of the mouse and you don't get what you want. Come on, there you go. So again, If we're going to start moving up in a minor wave 2, I'd be expecting a little bit more than what we're getting, to be honest with you. That's why I'm still looking for, maybe we need one more little slide down below 11,923. And we may get all of this prior to tomorrow's opening. So because if you've already listened to my big picture update, I am saying that minor wave 1 is complete in the NDX and the SPX. And that being the case, I'd be looking for those, the cash markets, to actually move higher. Here, it's suggesting that we might still have one more little drop to go, and then put in that 5, and then start that rally. So we shall see how this all pans out. So again, here in the futures market, if indeed we've got our wave 5 down here, which kind of be tough to call, but I might be able to stick it right there, or a very small 4 and a 5. And it could be kind of strange. Let me just check something out. No, you see, it did, but it's going to be a little bit more difficult call, whereas it's probably going to be more like A, B, and then this is a C. And we come back down, put another new low in, and then start to rally. So based on that, I'm going to go on this low and what we would look for in a wave 2. Minimum, we'd be looking for 12,255. Again, not getting in love with the upside. This is nothing more than a counter trend rally within this ongoing downtrend, which is now picked up again after reaching that high, completing the B wave. First minor wave down, possibly complete within that intermediate C wave decline. So if we're looking for, it's going to be an ABC to the upside, and we'd be looking for, most common retracement would be that we get between 12,357 and 12,460. So we got about a 100-point difference there where the market could play around. But because outside of all of this, we continue to have a lot of pressure coming from the interest rate debacle, the interest rate discussion, or whatever we want to call that. And that could keep a lid on rally attempts. Because in the absence of a catalyst, buyers are going to have to think, like, why am I buying? And if it's going to be left up to the derivative markets, which are just going to be, you're going to be hedging with the underlying, and that could be your selling premiums, you got to buy the underlying, or you're selling puts, and buying puts, you got to buy the underlying. So the hedges would then could cause this wave 2 correction for sure. So in lieu of a catalyst, we could come in very weak and maybe not get any higher than 12,255, or in all honesty, we have resistance right where we are. I'm going to go back out to that hourly so we can take a look at it. We have resistance right at the 20, which is at 12,048, actually 1246 to 4050, 12,050. Whew. And then we have the 50 period EMA, at 12,112, and then the first fib resistance at 12,128. So we got a lot of resistance coming up. And against the conversation of what's happening and what the PCE number did on Friday, got a lot that needs to be factored back in. And again, we may come up short and come here and then start to decline again. But what we're looking for is an ABC up if indeed this 5th wave finished here, and I can put a minor 1 still in the open. So what are we looking at right now? The possibilities. Possibility is that number 1 is just a small within this 1, 2, 3, 4. Still got a small 5th wave down to do to complete the minor 1. And there we have that. We have support at 11,900 down to about 11,885. That would be plenty to finish that up and then begin our minor wave 2 correction, which will be in a minute A, B, and C. So minute degree ABC to finish a minor degree wave 2. upside potential here to here to here. We have our resistance levels in here. Let's go over and take a look at the S&P. In the S&P, it's actually pretty much the same thing, except actually the same deal. 1, 2, 3, ABC 4, maybe. And it is actually finding its resistance at 39.83, which is pretty much what it did on Friday. Tried to get up, couldn't, had to back off, settle for 39.75. Now it's heading back towards that level. So the S&P continues to give us a little bit of clue, like, no, we're not really going to start pushing. We're likely going to drop. And again, what we're looking at is, in terms of where this fifth wave could end up, 39.43. We got close to that on Friday. Didn't happen. That would be up next. A drop back down, give that 39.43 to 40 a test, with the possibility of dropping to 39.21 or 39.20. What would that equal? 62%. So where wave 5 would be 62% of wave 3. That's very common. So when we can get that put together, it shows you what we have that potential for. So again, don't forget that we still have the Asian markets and we have the European markets that have not had a chance to react to what we did on Friday here in the US. So bear that in mind. So again, if this indeed did complete the move, which somehow I just don't see it right now, so I'm going to continue to go with that we need to back and come back down. But if not, then I think for a wave 2, we're looking probably back up here. If I had to put my fibs in to the whole shebang and put it down to there, I'm just going to do it that way. I'm going to go from that high down to this low. And we are looking at this outside number, 40.38, 40.67, 40.95. So again, that would be pretty high. But minimum, we've got 4,000 to 4,038, 4,040. And then we have all these resistance on the way up. That 200 should prove pretty stiff against what's actually happening in the markets. And again, remember, rolling down off of interest rates. So I think that there'll be a real hard push to really draw buyers back in, to come in just as a buyer because you believe the market has bottomed. So again, those are what I'm looking at for right now. We're going to check it out. What we have going on is here again. We're seeing this is the Fed funds rate off just ever so slightly. The bonds basically not doing much yet. I don't suspect that they will until we can start to get more traders online, everybody kind of come in and deciding what they need to do. And the conversation on interest rates continues. So that I did update in my big picture update, which has been published a little bit earlier. So if you need to check that out. That gives you a little bit of a hint what's going on in the bond market and how that may or may not relate with the equities. I'm going to complete it right there. And because I actually have this update that I'll get published, and then right behind this, I will be publishing my latest podcast with Dan Ascani, where tonight we go into trying to get behind the curtain on how a lot of the derivatives market really is what's controlling our moves intraday, and how that's all related to options. Okay. That's it for tonight. My next update will be on Monday, the 27th.